Hello and good morning, folks. It's good to be back with Almus Market Mornings, your daily dose of global financial update. Me, Shikhar Garg. Rupee has finally come out of its slumber with 2 days, consecutive days of strength against the dollar. I mean, we've been seeing a very narrow ranged action for the USD INR pair for the longest of time, and now some sort of an action have seemed to emerge. Fed speakers on the other side have been avoiding any hints towards the policy action as the market participants await the inflation data released this week. Now, although it seems they have already declared the battle almost over, but it's really to be seen as the central banks looks to not take their eyes off inflation. So, JK, I am really wanting to understand and would like your insights on where do we stand and what are you expecting out of the markets?
Hey, good morning. Uh, I I think market is kind of in a slumber ahead of CPI data tomorrow. We hardly had any significant numbers, particularly from the US in the last 2 days, and nothing much is slated for today as well. And all eyes are on CPI tomorrow. But there's been a lot of official rhetoric from US and Europe. Particularly from the ECB side, Bundesbank member Schnabel said the terminal rate will head higher than what the market is pricing in, and interest rates will have to rise significantly at a steady pace to reach levels that are sufficiently restrictive to ensure timely return of inflation to 2% target. And in fact, European yields have been leading the global yields higher in recent days. Besides the overhang of big supplies from the governments who have much larger deficits to meet this year, it keeps a floor under the yields, even if the inflation is going to fall. So don't count on yields falling too much from these levels because of the supply as well as the QT that is ongoing. Market did not get any clues from Powell on their monetary policy as he refrained from any related remarks in his scheduled speech at Riksbank event. Our other members like Michel Bowman and Bostic did not lose the opportunity to reiterate hawkish statements. As I said, data slate has been very clean this week, but a lot of discussion on the inflation tomorrow. Both headline and core inflation year on year are expected to fall. Uh, Obviously, market reaction will be big if there is an undershoot or an overshoot. Focus will be on core inflation and those related to services prices. Even if these expectations are met, I do not see Fed members changing their hawkish tone much as their focus is to get inflation to the 2% target, which looks quite far. In fact, the terms of inflation has now shifted from whether it has peaked to how fast it will move to the target. So we wait and see whether a surprise faster pace of rise falls or a severe recession forces Fed action to converge with the market expectations. Meanwhile, World Bank in its latest Global Economic Prospects report cut the global growth projection for 2023 from 2.9% to 1.7%, while that for US has been cut from 2.2 to 0.5. Growth in the Eurozone is expected to be flat versus 1.9% foreseen in June. Markets moves were subdued in currencies and bonds, while the stocks in US led a modest rally, pinning hopes on further fall in inflation. USD CNY hit another leg lower, almost touching the significant 200-week moving average at 6.7465, with Yuan recording an impressive 8% recovery from 7.27, which was seen earlier in this 7.32 that was seen last November. But when markets were in a slumber, the rupee had its unique moves, and we had a very interesting session with rupee making significant move lower, rather higher against the dollar, helped by inflows and a technical break of 80 to 40, which most people viewed as significant. The pair fell quickly to 81.70, which is an impressive single-day gain of 0.71%. Selling by one of the major state-run banks served as a cue for the rest of the market, and once 82 level was hit, stop losses were took care of for the rally. So now, from a situation of staring into a new low for the rupee, we are quickly down on USD by 2% and a significant support point at 81.70. And this is the uniqueness of the rupee, for which views of the majority hardly matters. So where from here, I think 81.50 to 81.70 serves as a near-term support, at least till tomorrow's data. And should we have a dollar bearish move beyond tomorrow, then I think rupee can make further gains. To probably see 80.50, which I think will hold. That's a level where I think central bank will start to replenish their reserves by mopping up any flows. Yeah, definitely we are now not looking at a new low for the rupee immediately unless we have really some bad news. And strategy should be for any rally towards 82.10 to 82.30 to be used for selling. Just ending with a very interesting comment from one of the leading global banks, the Union Bank of Switzerland, which is a Swiss-based global bank. Chief economist there says that borrowing cost could start getting cut in July, as early as July by the Fed, as a key inflation measure shows signs of cooling. And we think they cut this year, and that can be as early as July. So that's a very, very different view from what even the broader market has been expecting. And they say that the core PCE inflation, which the Fed is projecting at 3.5%, in their view, it's going to be at 2.1%, and that is very close to the target. So we'll see, markets and even the economy never fails to surprise us. And if this is going to be the surprise, black swan, if I can call it, it may not be black swan, it may be brown swan. So let's see if that's going to become a reality.
Okay, JK, and yes, I'd agree that though not a black swan, but yes, it is somewhat, in the expected case of scenarios. So yes, markets would be preparing for the kind of data release that we are getting. On the other side, I really like how markets entered into the slumber, but our rupee just moved out of this number. It's like rupee was waiting for the markets to get into one so that it can show its might. On the other hand, folks, as JK mentioned, Fed members may continue to have their hawkish tone while it is very eminent or visible by the market participants that they are going to be focusing on the core inflation data, which can be the point of release of which can be the data point release widely awaited. And as rest of the things continue, we can expect no new low for INR against the dollar, if we have to speak, as JK mentioned, in the shorter time frame, while we continue to see where the markets trend. That's it for today, folks. We shall come back again tomorrow with another round of update. Thank you so much for listening.